Hey, good morning everyone. Welcome to the video. Today is Cinco de Mayo. It is May 5th, 2020, bright and early, 9 o'clock in the morning. I'll be giving a quick update here on Bitcoin. Before I get into this, of course, this isn't financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market, of course. Also, before I get into this as well, I just want to, give a shout out to everyone that's on the Discord server. We've all been doing fairly well over the last couple days, especially here in the crypto atmosphere. If you're not part of our Discord community, just throw in a comment here in the YouTube chat. I'll be more than happy to get an invite code out to you so you can join us as well. We do a lot of, real-time collaboration, lots of really great and constructive conversations. Okay, let's go ahead and take a look at Bitcoin. There is something that I will point out. I haven't done a video since, gosh, it's been I think it was right before this run up right here. When the last video I did was, and we've just kind of been consolidating here. We're talking about a potential move to the upside. I can totally count 5 waves up to this. And then, the bigger question now that we are faced with is, are we going to break up out of this current formation, or are we going to break down out of this formation? So let me just talk about what my strategy is, and then you guys can, of course, make those decisions on your own on how you want to play the market. Well, the first thing, of course, here, and we see this, right? We see on the waves indicator, right? We've got the 1 hour, the 3 hour, and the 12 hour all in overbought conditions, pretty much right here at the very top, right? The first indication would have been right here, and the next indication would have been right here. And unless you are shorting, right, anybody that would have taken profit here would be, probably happy watching all of this chop happen in this range. Now, what we are kind of faced with is, where are we going to go next? Are we really going down, or are we going to break up and out of this thing? That's the next great question that really nobody has the answer to. I'm going to get rid of some of these moving averages, but before I do, I want to point out the importance of the 100 exponential that we have been kind of testing here. One thing that I do want to point out here on the hourly is the simple and exponential flip that is starting to occur. It is occurring this hour. And what that is, it's a simple trading strategy that some traders do tend to follow. When the exponential is above the simple moving average, same time frame, right? Same time frame, same measurement. So we're talking about the 200 here. When the exponential moves above the simple moving average, the price tends to move up. Okay, and we saw that start to occur right here. It tried to break down below, but it didn't. So I'm not saying this is confirmed in any way, shape, or form, because it's not yet. But we moved above right here, and then of course we moved significantly to the upside as the exponential was above the simple moving average. And now we're getting to the point where the simple moving average is about ready to move above the exponential moving average. And to some traders, that is a sell signal. Now, it hasn't really confirmed yet. We need to see some divergence, right? We always talk about divergence, and that is where things are not really tight, but they're starting to move further away from each other, right? So we could see some divergence right here. Right, as the price was moving sideways, the exponential moving average was moving further and further away from the simple moving average. So that was a bullish sense. What really needs to happen, though, is the price needs to get below this 200 simple and 200 exponential moving average. I'm not fully convinced that this is going to cross down, but it looks like it wants to. It looks like it wants to. It doesn't necessarily mean that it will. Just like right here in this area, right? It looked like it wanted to, but it never really did. Okay, so it looked like it wanted to move down below, but it never really did. And that could be exactly what's going to happen right here. So I'm not going to quickly rush into a trade just because I see something like that happening. So I'm just pointing that out more than anything. So there are 2 things that could be happening here. And I'm going to move down to a 15-minute time frame to illustrate this. I'm going to get rid of these moving averages because they are just taking up a lot of space here. All right, so two things are happening here that I can see. First, this guy right here, and then this guy right here. Okay, very possible that this moves down here. Okay, and this was a trap. Very possible. All right, what we've got here, this is what the bulls want to see. From the top, we have A, B, C, D, which is valid because it didn't go on the other side of B, and then we go down here for the E. Okay, for the E to come down here to about 8,600 seems logical, as long as it doesn't break this right here. This is very important. This C is important for the bulls at this point. Okay, so if we are moving down, what I don't like about the way they're moving down, it looks like we've got a 1, 2, 3, 4, and then we're going to go down for this 5. That's not something the bulls want. So yeah, that's not something the bulls want to see either. We want to see A, B, C, A, B, C, A, B, C to come down. Okay. So it just depends on how we come down. If we come down in a clean 5-wave structure down here to 8,600, things could be a little different. What I have a long from 9,100. It's actually like 9,097 or something like that. I averaged in on this spike up here last night. Okay, this is a bullish scenario, which would indicate that we are going to see move to the upside. Okay, now let's talk here for a moment on the bearish scenario. Okay. So what we can see right here, and the reason why I went to a 15-minute time frame is so you could see this a little better. We've got an easy 1, 2, 3, 4, 5. Okay, so we've got 5 waves down. What I don't like is the amount of time it took to complete this. So we have an A, B, C to complete the A, B, C to complete the B, and then A, B, or this could be an A, B, C, or really an A, B, C. One way or another, you're completing the C up here. Okay. Then what do we have? All right, from there, this is what's important. So we've got 5 waves down. It's pretty clear. You don't have any violation right here between the 1 and the 4. Okay, so we can see this. I'll go ahead and outline this. We've got the bottom of wave 1 that's right there at about 9,450. Okay, we didn't violate that, so that's good. Okay, I'm going to get rid of this guy. So we didn't violate him. So we've got a clean 5-wave structure to the downside. Even here, you can see wave 5 has its own 1, 2, 3, 4, 5 on its way down. So this is good. This is good. And I assume if I wanted to, I could pull a 5-wave out of this 1, 5-wave out of the 3. One way or another, we have 5 waves down. This is a little messy right here, I will say. But what the bears are seeing with their eyes, they're seeing this as a bigger 1, and this is a 2, and then we've got a big 3, 4, 5 coming down. Okay, and this is going to be on a higher degree. Okay, so moving this and knowing that these are way down, right? Way down. What we are then seeing here, instead of this being a CD, what the bears want to see, they want to see this 5 waves down, A, B, C, A, B, C. Let's see here, A, B, C, A, B, C, A, B, C. Yeah, that works. Okay, so I can dig this out of here where we do A, B, C into the A, B, C into the B, A, B, C into the D, right? So we know that this has to be valid anyway. I'm going to move this down here, and I'm going to put this guy up here. Okay, and these are alternates, right? So let me just outline this one as red, as this is the bearish structure. Okay, so this is also the bearish structure. Okay, and this is also the bearish structure. So the white is the bullish, and actually this one's kind of neutral because we expect that to be 3 waves up. So, so we've got the bullish scenario, which is our white count. We have the bearish scenario, which is our red count. Now, the further part to the red count that people are paying attention to if you're a bear is this. You've got a 1, 2, 3, 4, and then 5 right here on a lower degree, of course. Okay, so you've got a 1, 2, and then a 1, 2, which is very, very bearish. Okay, so you've got 5 waves down to create another nested 1, 2, and then you've got this to complete the 3, 4, 5 to complete this 3. Okay, this is on a slightly higher degree. Okay, this is where things get confusing, and this is why people don't like Elliott waves, because this is going to be a complicated drop if this drops at all. Okay, so again, full disclosure, I'm short from 90.94, 90.97, somewhere. It's just shy of 9100. I've got my average entry up here. Okay, so I'm short, but what I recognize is the bullish scenario. Okay, so I'm short from approximately right here. We'll just say 90.9850. It's very close to that. And I'm expecting to pull out of this way down here around 7,700. My stop loss now is probably going to be on the other side of this B wave over here. Okay, so currently in that trade, it's not bad. Now, what I'm planning on doing is I'm planning on straddling this before the halving. And what I mean by straddling this is if we can get down here to 8,600, I'm going to open a long position and I'm going to be looking to take profit on this way higher. Okay, now let me move to an hourly time frame and just kind of explain what this strategy is going to be. I've already gotten into my short position, so I'm kind of waiting on that to move itself down here to straddle the long position. Again, right around 8,600. Okay, so right in that general area. This long position that I'm going to be in, I'm probably going to do a stop loss on the other side of this A. Okay, I'm going to do a stop loss on the other side of this. And I'm going to be holding this up a bit higher. Okay, and let me pull this out and just kind of show you what we've got. Now we're going to measure the height of this triangle and a breakout from the E, which is probably going to be about right here, assuming that this is what happens, okay? And when I say the breakout, what I'm expecting to happen, if this is the case, where we've got A, B, C into the E, and then we're going to have a 1, 2, 3, 4, 5 to complete this, just shy of 10,000, okay? So I'm going to move this. This is where I'm going to be looking to take profit, assuming this is where we get out of this wedge. If we get out here, right, the breakout, let me just get this right. This guy right here, sorry, I've got too much going on. If we break out right here, yeah, I mean, really our target is going to be right around 10,000. I could see that happening. That's very possible. Okay, taking along from 8,600 to 10,000, that makes sense to me. As far as the short goes, okay, let's measure this in the opposite direction. We are going to measure, again, the height of wave A pulled from the breakdown. So if we break down here, okay, so if this is a 1, 2, we're going to break down. Our target to the downside of this is going to be actually 7,500. So this 3, probably going to be right down here. This 5 is going to move its way down here. And this is going to move its way down here. All right, so what do I have? I have a 17.61% short opportunity, and I have a 15.89% long opportunity. This is complex, right? This trading style is not for everyone. This is what my plan is for this current wedge. All right, so I'm short from 9,100. Just to keep it nice and even. I'm going to stop loss right here on the other side of this wave here. Okay, I'm going to long from 8,600, and I'm going to stop loss on the other side of the A here. Now, if this is a wedge, technically your stop loss should be right here at about 8,500. I'm going to take it down to 8,400 just to give myself a little bit of leeway because I'm already in a pretty profitable long position. Technically speaking, I could just let one liquidate. Now, I don't recommend doing that, right? But if your position sizes are over leveraged, right, you could let one liquidate and then take profit on the one that moves in the direction that you want it to. But nonetheless, I don't suggest that trading strategy, but I do know that there are some people that do that. So short from up here, I'm going to long from down here at 8,600 if we get down there. If we don't get down there, I'm just going to take the stop loss at about 9,200, a little on the other side of 9,200, and I'll just eat it, and I'll just wait for the next trade, because there's always going to be a next trade. But as long as we continue trading under 9,000, I do believe we're probably going to get down here to 8,600. It would be nice to see that happen. It's probably going to take some time. You can see the hourly stochastic is working its way down. Our green hourly is moving its way down, and the yellow 3-hour is trying to move its way down as well. And so we're just going to kind of give this some time. The 12-hour is still pretty bearish, but bearish in the sense that it's still pretty high, so I could see the 1 hour and the 3-hour resetting. The fact that the 3-hour is all the way up here, it's probably about ready to issue a sell. If it hasn't already, it's probably thinking about it. Yeah, we don't officially have a sell on this just quite yet. We could see another push up, but I do think ultimately this 3-hour is going to cross bearish, which is why I think we're probably going to take the next day or two to move ourselves down here to 8,600. Then we take the trade up here to the upside. But this is my plan for straddling this wedge. I've got a good position here for a short that I'm not going to get out of unless I get stopped. Then I'm looking to get a good position down here at 8,600 for a long. It's going to take some time for this to work itself out. If this is a pennant, if this is a bullish wedge, I'm not fully convinced that it is. But if it is, I'll trade it just in case it is. Ultimately, my short-term bias is we go down. But I'm going to trade this in case we go up, because nobody has a crystal ball, nobody can 100% predict the market. But this is my plan for trading the market. Upside target just shy of 10,000. Maybe we move our way up to 10,250. We'll kind of see how that goes. But the measured move, a 100% move on the projected breakout, which is going to be right here at about 88.88, is going to be 99.82. If we break down from right here, then our measured move to the downside is going to be 7,500. 7,500 would be fantastic. I'd love to see that. But nonetheless, I'm going to wait to see what happens here. Again, I'm going to let myself get stopped at 92.05 if we get up there. And if we get down to 8,600, I'll take the long position at 8,600, and I'll do a stop loss here at about 8,400, in which case my long position will still be in good shape. I will be missing out on profits from this stop area right here, right? So this is going to be my my neutral zone in that area right there, because I will be in a short position but also in a long position. So if this does go against me, this zone right here, I'm not going to be making any money, because it's going to be moving against my position. If it stays and continues to just kind of consolidate in this zone, then we'll reevaluate, but I'll continue to hold both of these positions. So I'm short on perpetual, and I'm going to be long on the June futures. So that's kind of what my plan is for straddling the position. I don't play with two different accounts. I will short on my longer term bias, and I guess by longer term I mean a month or two, and I will long in this case on a futures contract. So that's what I've got right now. So hopefully this helped you guys. If it did help you in any way, shape, or form, like, subscribe, share, all that good stuff. Tell your friends. Join the Discord if you need an invite to the Discord. Just throw in a comment. I'll be more than happy to get an invite code out to you. And wherever you are in the world, I hope you're having a good day, a good night, good evening, and we'll see you in the stock channel in 9 minutes. And we'll get moving on the stock market. Take care, everyone.